Did you know that you can predict Bitcoin's price with a few simple calculations? You're probably one of those investors who say, every time I buy, the price drops. Don't worry, you're not alone. Many new investors make this mistake and quickly lose money. Those who understand why this happens and learn to read price movements stay in the game and win, while those who don't keep handing their money over to those who do. Today, you're going to learn how to analyze Bitcoin's price action and break free from the group of impatient losers. Let's dive right in. To predict the price accurately, we'll use some simple data. None of this is difficult, and you'll soon see just how easy it is. The first thing we'll look at is called on-chain analysis. These are data points that anyone can track directly. What makes them special is that they are completely transparent and publicly accessible. No one can manipulate the system here. Thanks to Bitcoin's inherently transparent nature, this analysis is straightforward. With on-chain data, you can easily track important events such as money flowing in and out of exchanges, whale movements, investor behavior, miner sales, and halving timings. If you have the time, reviewing all on-chain data will be very beneficial and will make your predictions more precise. But even if you don't, just monitoring exchange inflows and outflows, along with halving dates, can significantly increase your chances of success. If the amount of Bitcoin flowing into exchanges is rising, you should expect a potential dip. Because investors are transferring their Bitcoin from personal wallets to exchanges to sell. On the other hand, if there are heavy outflows from exchanges, it indicates that investors are storing their Bitcoin long-term, which is a positive signal. Similarly, if inflows of stablecoins like USDT to exchanges are increasing, it signals that large crypto purchases might happen soon. You can see these data with simple searches online. It is surprising that such easily accessible information allows you to follow the market so clearly. Yet most Bitcoin investors still do not know this. Another important piece of data is the halving, which is even simpler to track. Bitcoin experiences a halving every 4 years, which cuts the amount of new Bitcoin miners can produce in half. As halvings approach, people start accumulating Bitcoin, and with the halving comes a price increase cycle, or the bull market. The last halving was in 2024, and prices have risen sharply since then. This pattern has occurred with every halving in history. The next halving will happen in 2028, giving you time to prepare for the next bull cycle. I won't go into all the other on-chain details right now. If you want to learn how to do a more detailed on-chain analysis, you can support me by liking this video, and I'll make it for you. Now let's move on to one of the most important steps in price prediction: sentiment analysis. This type of analysis is very simple, yet it provides extremely valuable information. It shows whether people are greedy or fearful when it comes to Bitcoin. The index performs deep analyses of social spaces like social media and news to give us a single score. If you want to check it yourself, just search for the Bitcoin Fear and Greed Index. The lower the score, the more people are avoiding Bitcoin and likely selling. Conversely, when people are greedy and buying Bitcoin heavily with everyone talking about it everywhere, the score will be higher. When the score is rising over time, you can expect prices to increase until it reaches very high levels. At some point, the score will start to decline, and you can use this simple but effective metric to anticipate potential price drops. If you are a long-term investor, you can start buying when the index is at its lowest, taking advantage of the price increase as people turn back to Bitcoin. If your goal is short-term trading, you can accumulate Bitcoin during the transition from a low score to a high score and sell when the trend reverses. The last thing I will talk about in this video, and what you should definitely follow, is macroeconomic data. By using this information, we can predict the direction of cash flow in the market and in turn, make more accurate Bitcoin price predictions. The most well-known of these indicators is interest rates. In general, when interest rates rise, people tend to move their money out of Bitcoin and other assets because they believe they can earn a guaranteed profit from interest. If interest rates start to fall, people begin looking for new assets to invest in, which naturally drives Bitcoin's price higher. You should also always keep in mind global events such as wars, sanctions, crises, and other factors affecting international politics and the economy. For this, you can follow indexes like the Geopolitical Risk Index. With a simple online search, you can easily find clear information about global risks. When risk levels rise, don't think this is a bad thing. Price pullbacks create new buying opportunities for you. This is why being a long-term investor is almost always profitable. It's impossible to predict the price of any asset with 100% accuracy. However, by following what we covered in this video, you can greatly increase your odds of success. You will have a rough idea of what Bitcoin's price might be 5 years from now. If you use this information as a supportive tool for your long-term investments, you will manage your savings much more effectively. But if you try to use this data to trade, you will most likely fail. We already discussed the reasons for this in previous videos. From now on, instead of feeling upset when prices fall or panicking when the market crashes, you can anticipate it and prepare your portfolio accordingly. The best buying opportunities always come when everyone else is selling. Like this video and subscribe for not miss out next videos. See you next week in the next video.